This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping this show on July 13th, 2012. Our time is 8:38 Mountain, 10:38 Eastern. Radio show runs AM 640 in Toronto, 630 CHED Edmonton, QR 77 in Calgary. If you ever miss a radio show, they are archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com, and don't forget, you can sign up for our free podcast. Our radio show has a companion. It's our newsletter. If you'd like to receive our newsletter, you can get it from Worldwide Precious Metals, the only company Harold recommends you deal with when it comes to investing in gold and silver. Connect with them, 1-866-623-2002, their website, wwpmc.com. You can also speak with Harold about getting the newsletter. We send it out via email free of charge every week. His number, 1-800-432-1022. His website, rarecoloreddiamonds.com. Harold, another very interesting week. One of the stories that might have gone under the radar that we have in our newsletter, I think it's very telling. Goldman Sachs, Bank of America saying the Fed is going to hold interest rates near zero until 2015. Remember, it was 2013. They're now saying 2015. And another very huge positive for precious metals, hard assets, diamonds, gold, and silver. France had a bond that was issued at a negative interest rate. Same for Denmark. Money market funds in Europe are no longer taking any money because you won't make any money. They can't reinvest that money and make any money for you. Harold, that is a huge positive for hard assets.
You better believe it. Again, all these things are unfolding at this time, Randy, and they can be a little bit confusing, but by keeping interest rates basically at zero for another 3 or 4 years is only going to bring on massive inflation. So, again, the markets have, actually this week the markets were very good. We're sitting right now as we're taping the show, gold's up 22.10. We're trading right up at $1,598, almost at $1,600. So we're looking very strong again in gold. In fact, this week, gold did very, very well. We had a couple days where gold was up over $20. We had a day on Thursday where the market opened down $20 and only finished down $4 on the day, and silver was down, I think, 20, 30 cents at one time and finished up on the day. So all in all, I'm pretty convinced that we've seen the bottom of the gold market at about 15 and a quarter, and I'm pretty sure that we saw the bottom of the silver market at $26. We're back up to $27.70 in silver. We're up about 35 cents today. And again, the markets are looking very good. I think that at this point, one of the reasons that gold and silver have been down and as volatile as they have been is because of the U.S. dollar. I know that sounds like a joke because the U.S. dollar is a currency that appears to be doomed at this point, but the U.S. dollar has been rallying against the euro because the situations in Europe with the sovereign debt situation is more severe, I guess the investors feel, than the situation presently in the United States. So basically you've got the euro falling down to the 121 level, and you've got the U.S. dollar actually very close to 84 cents. Now, 84 cents for the U.S. dollar is a concern to me because, again, as the U.S. dollar tends to go higher, that will push down the price of gold. One of the reasons that we are so bullish on the gold and silver markets was that we felt that the U.S. dollar would continue to weaken substantially. And at this particular point, I still do believe that the U.S. dollar will fall substantially. But at this point, we are breaking into bullish territory on the U.S. dollar. And if it breaks above 84 cents, it could go to 86, 87 cents. However, the amazing thing is that gold seems to be separating itself at this point from the U.S. dollar, and has done this before. In 1979 and 80, when we had high inflation and 22% interest rates, as the Federal Reserve kept on raising and raising and raising interest rates, and the U.S. dollar kept on strengthening and strengthening and strengthening, the fact is gold kept on rallying, and so did silver. And once interest rates hit about 22%, and the dollar was extremely strong, that's when gold topped out at $850. So, we've seen a situation where the U.S. dollar and gold have separated itself. Actually, the last time that we saw this was the most bullish time ever for precious metals. So, again, I think at this particular point, realizing that the U.S. dollar is really only gaining any major strength against the doomed euro, to me, it's not a real big deal. The Canadian dollar is still holding in very strong at about 98 and a half cents, and I think the Canadian dollar is one of the safest currencies to own. I own a lot of Canadian dollars myself and have put them away comfortably in a safety deposit box. So, we're not speculators here, and speculation at this point is not the smart thing to do unless you're an expert trader, and I can assure you, even if you're an expert trader, you're getting beaten up in this market. They're up one day and down the next, and again, there's just too many current events out there that could change the face of this market very, very quickly. One of them, or two of them, Randy brought up at the beginning of the show. Now, there's four major problem areas as I see it. The U.S. debt, $16 trillion. They're never going to get out of that. Europe, the sovereign debt situations, countries going bankrupt, and very similar situations to what the U.S. is going through is what Europe's going through. It's all debt. When you owe this money, you got to pay it, and if you don't have the money to pay it, you're going to have to print it, and that's basically what's going to happen fairly soon. You've got China's economy is stagnating, and then you've got the situations in the Middle East. You've got four major scenarios going on at one time. Any one of them could trigger a massive move up or down in the markets. And basically, the most bullish scenario for us would be quantitative easing. The U.S. economy is stagnating, the European economy is stagnating, and so is China. So what's going to happen within the foreseeable near future is that they're going to have to put money back into the economy to bring on new jobs, to get people spending money, to get people excited again, and that's just not happening at this point. Why in the world would the U.S. not want to get their economy going again? They certainly do, but there's a major election coming up this year, and again, they're concerned about doing another quantitative easing and printing all this money, but the final result would be, if they did do the quantitative easing, the stock market would rally because it's bullish for the overall economy, so I don't see why in the world they wouldn't want to do it. The bottom line is they will do it. It's only a matter of time. So the fact is, whether it comes in November after the elections or whether or not the Federal Reserve is forced into doing it before the elections, you can be rest assured it is going to come. There's absolutely no way that we can stimulate the U.S. economy at this time without further dollars going into the economy. And because there is no dollars to offer, there's only one solution. It's go back to the printing press and print and print and print. I really don't think that's a big deal for the United States at this point because, again, their interest rates are at zero anyway. So the other thing that happens during quantitative easing is that gold and silver prices skyrocket. If you notice what will happen with quantitative easing is that when they print all of this money and they put the money back into the system, again, you're going to see a rally in stocks, you're going to see a rally in precious metals, and the reason you will see a rally in precious metals is primarily because the dollar is going to weaken. So by coming out with quantitative easing, you'll literally see the dollar fall out of bed. Another thing is that we know that from time to time, these markets tend to be a little bit manipulated. Again, I'm not certain to the extent that a lot of the other analysts feel that they are, but there definitely are times when these markets are manipulated. And again, it would not shock me that they would manipulate the interest rates down, again, in order to accomplish what they're looking to accomplish. So as far as I'm concerned, it's only a matter of time until inflation comes, and inflation comes in a big, big way. The way that the government looks at inflation versus the way that we look at inflation and other people look at inflation is two different things. The markets will respond to the government reports that come out on inflation saying that inflation is low. However, there's a drought going on in the Midwestern part of the United States at this point. It's caused corn, wheat, and soybean prices to skyrocket. It's one of the worst droughts in history thus far, and they're comparing it to the drought that happened back in the 1980s that caused billions and billions and billions of dollars worth of damage. And again, what's happening to the price of these staple items that we use every single day, corn, wheat, and soybeans, the prices are skyrocketing. On top of that, oil's back up to $86, $87 dollars, and with the problems in the Middle East, I have no doubt in my mind that oil is going back over 100 and possibly going to as high as 200 or more. That's inflationary. So the bottom line is I really don't care what the government figures say. You know, when your life is affected by higher food costs and higher oil costs, there's no doubt that inflation is affecting your life. And whatever the figures, are, it really doesn't matter, because the general public is the one that's suffering, because when you go to the gas station or you go to the grocery store and it's costing you more every week to fill up your gas tank and to put food on the table, that's inflation in its most simplistic terms, and that's what we should really go by. So the bottom line is that by quantitative easing, that's a very inflationary situation because they're adding so much money to the system. It's a very bullish scenario for gold and silver. I would not be out of the gold and silver market for a second at this point. I wouldn't be trading it either. I'm not a trader at this time in the markets. It's just too speculative. The bottom line is that there are fundamentals in the market that could make gold still this year. We've got, the rest of July, August, September, October, November, December. We have a long time left in this year. We could see a rally in gold that could take us back over 2,000. Don't forget 1,900 was the all-time high, and we could go as high as 2,200 this year. In actual fact, that was our prediction at the beginning of the year. So far, the markets have made us look like we don't know what we're talking about. But again, the summertime is always slow, and the beginning of the year was just loaded with confusion. There's no doubt that as we get closer to the end of the year, that these markets are going to rally, and it's going to catch a lot of players in the metals markets on the wrong side of the fence. So I think gold could still finish above $2,000 this year. Let's face it, with all the negative, thoughts and articles being written on gold and silver at this point, the all-time high for gold was $1,900. We're sitting at $1,600. We started this thing buying it at $250. So how bad has gold done? Gold has retraced slightly from its highs and is poised to make a gigantic move. There are so many fundamentals in this market that could make gold go over 2,000 and possibly, go to the numbers that we felt, with certain situations in the market that are possible over the next 3, 4, 5 years. We're not ruling out $4,000 or $5,000 gold, but let's get back up to 1,900 first, reanalyze the market at that point, and see where we're going next. Same scenario with silver. Silver got beaten up more than gold. The high that we saw in silver was 50. We saw it pull back to $26 in, a tremendous amount of selling by these banks type of thing. But all in all, silver's back up to $28, and silver's one of the most explosive metals you could ever trade, and we could literally see silver by the end of the year back up to $40 and even $50. And over the longer term, there's just no doubt in my mind with inflation and everything else going on that we will see silver trading at over $100 before this whole scenario is over. We first started buying silver when it was below $4. Again, also, we recommended oil very heavily this year when oil was at $100, and seeing that the oil market pulled back to below 80, again, it made us look like we didn't know what we're talking about. I've traded oil for over 30 years, and I've traded currencies and metals for over 30 years, and I know these markets fairly well. And basically, we are not trading the oil market. We're buying and holding, just like we're doing with gold and silver, because buying and holding crude oil, one of the major scenarios, we're bullish on oil anyways. We feel that the major Saudi oil fields are diminishing tremendously. I've read several reports on oil, and I'm 100% convinced that over the next 4 to 5 years, oil will be one of the strongest commodities and possibly trading in the $150 to $200 range just on a normal basis. However, over the short term, you do have a scenario in the Middle East between Israel and Iran that is extreme, and it does certainly warrant our attention. The fact is that the U.S. has brought sanctions against Iran that has wreaked havoc on the Iranian economy, and they're infuriated by it. Iran's inflation is off the charts. The fact is that the U.S. has brought sanctions in oil against them in other areas. Now, one of two things are going to happen. Either Iran is going to say, okay, we've had enough, we give up, and we're going to stop our nuclear power plants and that type of thing, or they're going to go to war. Every indication is that they're going to go to war. The fact is that the U.S. will help Israel. Israel is the country that is being threatened by Iran, and the fact is that Iran has the missiles to do some serious damage. They also have the opportunity to cut off the Strait of Hormuz, where oil, about 40% of the oil passes through. Now, at this point, the U.S. has got warships sitting in the Persian Gulf, and they've got these submarines automatic submarines. They're not manned by manpower. They're actually like remotes, and they can actually blow up, supposedly, the mines that Iran is going to put in the Strait of Hormuz. But the bottom line is that if the Strait of Hormuz is mined, then there's no ships that can go through, and the insurance companies won't insure these tankers, and oil prices will go to over $200 on a short-term basis. So, again, you've got four major scenarios all at one time that could move these markets substantially. My strongest recommendations at this particular point are to be in the gold and silver market physically, own it outright. The fact is that you don't want to trade these markets. You want to sit back for the next 5 years and let inflation kick in and see how much money you make in gold and silver. The other scenario is diamonds. Diamonds are skyrocketing in price. Certain diamonds last year, between last year and this year, have gone up 45%. And at the beginning of the newsletter this week, there's a quote that you just have to read. In fact, the diamond section is absolutely phenomenal this week, and I'm so proud of the recommendation that we've made to our clients on diamonds, because at this point here, between gold, silver, and diamonds, I believe that we're going to be the firm where our clients, when all the dust settles, are going to come out ahead of everybody else. I'm extremely enthused about the future because, again, I believe that we're invested in the right way and we're diversified correctly. The fact is, you want to have cash on hand, you want to pay down your debts, you want to own physical gold and silver, and you definitely want to own some diamonds. I personally, am not a fan of the stock market at this point because I don't like investing in stocks when countries are in such a horrible financial condition. But if they do come out with QE3, there is no doubt that the stock market in the United States will rally. And for that reason alone, you would think that the Federal Reserve would actually come out with QE3 sooner than later, but it will happen this year.
The telephone number to invest in precious metals, 1-866-623-2002. The company Harold recommends you use, a Canadian company in business for over 10 years. They have 10th anniversary incentives underway right now. Learn more by going to their website, wwpmc.com, wwpmc.com, or speak with Worldwide Precious Metals about starting your own precious metals investment account today, 1-866-623-2002. 1-866-623-2002. And you may be saying to yourself, well, why would I invest right now? Glad you mention it, because you want to read in our newsletter. You can speak with Worldwide. You can speak with Harold about getting our newsletter free of charge via email every week. We have 2 stories in our gold section about seasonality. Don Vailloux, and you have seen him on the Canadian Business Channel, no doubt. He's a technical analyst. He said, get ready for gold's season of strength. Brooke Thackeray's 2012 Investor's Guide notes that the optimal time to invest in gold for a seasonal trade is from July 12 to October the 9th. The trade has been profitable 11 of the past 14 periods. During the past 25 periods, gold bullion has outperformed the S&P 500 index by 4.7%. Another story that we have, gold market poised for rally. Seasonal trends that often see gold and gold stocks rally from midsummer to early autumn bode well for investors. Bullion has risen an average of 14.5% in the late summer for the past 11 years, according to the Bank of America Merrill Lynch analyst Michael Jalanen. He noted that a key driver of these rallies is a rebound in jewelry demand coming from India's festival and wedding seasons. Mr. Jalanen also told clients that a possible third round of quantitative easing and the approaching U.S. fiscal cliff could be a trigger for bringing new buyers into the gold market. And obviously, he goes on to say in this report, you can read it in our newsletter, they are maintaining a 12-month price target of $2,000. So if you're thinking about starting your own precious metals investment account, read those articles, get the newsletter from Worldwide, wwpmc.com, wwpmc.com, or speak with them at 1-866-623-2002, 1-866-623-2002. And if you're excited by that, Harold, we have something in our newsletter that is even more exciting. The chart of the day. Gold could surge to $8,300 by 2015. We have the charts, we have the information. Erst Group has put out a report, In fact, they're actually saying that short term, they see $2,300, but here is their thesis behind $8,300. You may have heard of Pareto's principle. It's often referred to as the 80-20 rule. Some people believe it's 90-10 now. The idea is that 80% of the effects of something come from just 20% of the causes, so maybe 80% of people control 20% of the wealth, or 80% of the sales come from 20% of your customers. Now, they went on to say in this report that applying the Pareto principle, if we were to assume that the latest trend phase for gold were to start in August 2012 at 1,600 and the bull market began in August 2001, the parabolic phase would last 29 months and end in September 2015. The price target, according to the 80-20 principle, is therefore $8,300. If you add silver to that mix, obviously we're talking silver at $100 or higher. A very, very interesting thesis, and I really encourage you to get the newsletter and read about the Pareto principle and the Erst report, where they're saying short term they see gold over $2,000. Longer term, there is the possibility that you could see $8,300. 1-866-623-2002, 1-866-623-2002. The website is www.pmc.com. And Harold, then you add in something else that was sent to me this week by Worldwide Precious Metals. It's in the silver section of our newsletter, and we have about 2 minutes left in our section here. Sprott Physical Silver Trust is going out, and they are issuing new units, and they are going to be buying about $200 million worth of physical silver after they take in this money. So obviously silver is a very small market. That is the thesis of Worldwide Precious Metals. And when you add $200 million going into the market, buying up physical silver, as Sprott will do with this trust offer, obviously it could move the market in a very positive direction for those that are involved in silver. But Harold, this week, putting the newsletter together, it's amazing to me how many people are coming around to our way of thinking that we've talked about for so long on our radio show, and how many people, even though the sentiment maybe with the average person is not great with precious metals right now, but how many smart people, the smart money, they're all saying gold. We heard that from the smartest man in Europe last week, that story that we had. And the reports continue to come out, and you can see them in our newsletter. The bullishness towards hard assets by the smart money is increasing because they see what is coming down the pike. Either you have a default when you can't pay your bills, or you print your way out of it, you inflate your way out of it. And Harold, with about 30 seconds left, I think inflating their way out of it is the only option for a lot of these countries.
That's what the game plan seems to be, and again, that's why we're sitting back and waiting for those scenarios to kick in. That's why you don't want to be in and out of the market, because once the numbers come out and the market starts to run, you don't want to chase after it. So, again, I'm all about the inflation in the market. There's no way that we're not going to have inflation down the road. Right now, interest rates are low, but the fact is they're going to have to raise interest rates in the future to fight inflation, just like they did in 79 and 80, and that's what I was referring to earlier in the show, that the price of metals can skyrocket even if the dollar goes up.
Going to come back and talk about diamonds. And we will do that. Don't forget, call Worldwide Precious Metals to invest in precious metals, 1-866-623-2002. The website is www.pmc.com. Talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on July the 13th, 2012. Our time is 9:03 Mountain, 11:03 Eastern. Radio show runs in Toronto, AM 640 in Toronto, 630 CHED Edmonton, QR 77 in Calgary. Hopefully everyone listening in Calgary is back listening to QR 77 after the trouble they had this week. To invest in precious metals, There's only one company Harold recommends you use. That is Worldwide Precious Metals. The telephone number 1-866-623-2002. The website, wwpmc.com. Get our free weekly newsletter. As I touched on, this is the perfect time for gold seasonality. Take advantage of it. Start your precious metals investment account today. The numbers are in your favor to make money because of seasonality. You can read that in our newsletter. Get it from Worldwide. wwpmc.com. Telephone number 1-866-623-2002. Should remind you, if you ever miss a radio show, the shows are archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com, and we have a podcast as well through iTunes, so you can take us anywhere you go. I listen on iTunes. I love iTunes. Harold's website for diamonds, rarecoloreddiamonds.com, rarecoloreddiamonds.com. This week's featured diamond, and we have had a string of just stunning featured diamonds. This week's diamond is a 0.70 pear-cut fancy vivid yellow-orange diamond. When I was sent the video for this diamond and the statistics, literally stunned when I clicked on the video link. You can see the video yourself. You can see a picture of it in the newsletter. The yellow-orange color is one of the most stunning I have ever seen. This is an amazing pear cut, and you don't want to miss it. Speak with Harold. Give him a call, 1-800-432-1022 about this week's featured diamond. It will go quickly, and it will because of not only the way it's cut, because it's an amazing cut, but the color. The color is simply stunning. I've never seen anything like this. Take a look at it. Go to Harold's website, rarecoloreddiamonds.com. Click on the featured diamond link, or you can do that through our newsletter as well. One of the top stories this week that came out, CNBC reporting, diamonds trump gold as investors' best friend. Investors should be putting their money into diamonds, as the precious stones represent the best safe haven available right now, according to Philip Manduca. He's the CEO at Titanium Capital Partners. He told CNBC's Squawk Box Europe. He said, "You should have been parking your money in diamonds for some time now. They are portable, liquid. There are no storage costs, unlike other asset classes. You get to enjoy them while you have them. It's been a wonderful place to be and will be a very good place to be in the next 3 to 5 years. Even better than my key recommendation, which is gold," he says. He says investors should avoid diamond-related stocks, but buy the hard asset itself. Diamonds, they are one of the best hard asset plays out there, and the girls obviously will agree, will love that recommendation as well. You can read that story in our newsletter. We also have a story about Australia's largest pink diamond finding a home in Melbourne over in Australia. The Argyle Mine has donated a 8.01 carat Argyle pink Jubilee diamond. It's on display at the museum there, and you can see more information in our newsletter. But Harold, exciting information from Philip Manduca. We've had stories about him from CNBC in the past, and we agree with him 100%. And the featured diamond this week, I keep raving about it. I'm going overboard, but I'm deadly serious when I say it. It's one of the most amazing colors I have ever seen.
It certainly is. I mean, first of all, it's a vivid color, which is the very best that you can get, and it's a yellow-orange. So the bottom line is it's a one-of-a-kind diamond. It's not ridiculously expensive. It's just slightly under $100,000. But again, there's not another diamond like it. Vivid, yellow-orange. Just the color just is absolutely spectacular. So I certainly agree with you, Randy. You know, being in the diamond business as long as I have, and to be able to, you know, touch and play with these diamonds every day is just why I have a smile on my face every day. They're just absolutely beautiful. And the fact is that they're becoming the best investment that you could make. As uncertain as the world is, as we talked on the radio show today, you know, you've got the U.S. debt situation, you've got the problems in Europe with the sovereign debt, you've got China's economy stagnating, and you've got problems in the Middle East. That's only to name the 4 biggest situations. Those are all reasons why you need to be in the diamond market, because again, the economy, and you're talking about the biggest economies in the world, are on the verge of collapse. that means currencies are going to go crazy. They're going to be, some of them won't be here, some of them will be devalued. There'll be a few currencies that will be extremely strong. So the fact is that you need to be in an asset that, number one, is not affected by a lot of the negative things. And diamonds are that type of asset, especially colored diamonds, and especially the colored diamonds that we carry. We only carry the very, very best because we want our clients to make the maximum return on their dollar. Both one, because we care about our clients and want them to make that money, and number two, for selfish reasons, because when our clients do well, we do well. When you buy a diamond through my company, rarecoloreddiamonds.com, and you sell that diamond through my company, H. Siegel Fine Auctions, we get paid only on the profit. So if we don't perform for you, we just wasted everybody's time. And again, I've been in business long enough to know not to waste time. So the fact is that the rare colored diamond market is the safest market to be in because it doesn't trade on exchanges. Gold and silver, corn, oil, commodities, and currencies all trade on an exchange. And you've got buyers and sellers. Some people are bullish, some people are bearish. That's what makes the market go up and down. Same scenario in the stock market. You know, you've got people that are bullish on a stock, you've got people that are bearish on a stock, and that's why prices go up and down. And sometimes they can be very violent. The bottom line is with diamonds, they don't trade like that. They don't trade on an exchange, and especially with colored diamonds because there's so few of them that what you really have to be concerned about is supply and demand. Now, at this particular point, with Europe falling apart, we've done so much business in Europe over the last few months, and that's primarily because Europeans are petrified of what's happening in their countries and with their currencies. So the smartest thing for them to do is to convert their currency, mostly the euro, into an asset like a diamond because it's safe, they never fall in price. They're portable wealth. If they had to move and start all over in another country, they can do so with a diamond. And the fact is that these diamonds, certain diamonds, can skyrocket in price. And certain diamonds have track records. Like, for example, yellow flawless diamonds. Now, I've invested, over the last few years, multi-millions of dollars to acquire yellow flawless diamonds for our clients. They're the best-selling diamonds. You do not have to be a multimillionaire to invest in a yellow flawless diamond. In fact, they started around $15,000. And they increase in price by 25% a year, and they double in price every 4 years. And the most exciting thing is that because we talk a lot about inflation, in 1979 and 80, when we had massive inflation, 22% interest rates and record prices in gold and silver, colored diamonds went up 500% in 2 years. So they're like the perfect asset. They never decline. You can make money with them, and they can protect you financially. So what we recommend very strongly is to invest in yellow flawless diamonds. Again, they start at about 10 or 15,000. They go all the way up into the millions. In fact, if you look at the auction results lately from Christie's and Sotheby's, it's really yellow flawless diamonds that are setting records at auction almost every single time. One of the most exciting things is that last year at Christie's auction house in New York, there was a 2.6 carat fancy vivid yellow marquise diamond ring. It wasn't flawless, but very close. It was a VVS1. Now, the people at Sotheby's estimated that the diamond would sell for approximately $120,000 to $180,000 because it was in a Bulgari ring. Well, this ring sold for $960,000, basically 5 times what the people at Christie's thought it would sell for. Now, this is what the trend seems to be. Larger yellow diamonds are selling for fortunes. They're very, very difficult to get. But the fact is, if you can get one, they go up more than almost any other asset does. I've got large yellow flawless diamonds. I invested very heavily in them for my clients. I've got 5 carats. I've got some 10 carats. I've got a 30-carat fancy intense yellow internally flawless diamond that was selling at jewelers in New York for over $3.5 million, and my price is $1.6 million. So the fact is that there are no middlemen in my operation. My partner is one of the top cutters in the world. He cuts 90% of the world's flawless yellow diamonds, cuts most of the green diamonds, and is the biggest supplier of D-flawless white diamonds in the world. In fact, I don't have them all up on my website, but we own over 90 D-flawless whites, and those are the diamonds that went up 45% last year. So the fact is that we invested in these markets very, very heavily in these rare colored diamonds for our clients. We're the only company that can deliver the diamonds directly to you. We send you our newsletters each week. We send you auction results as they happen, and we're the only company that owns the secondary market to resell these diamonds. What is the point of investing in a hard asset or a collectible and never being able to sell it? So we took the initiative and we built 8 Siegel Fine Auctions, which is an auction house that's online, real-time, one of the best things we've ever built. We've had 7 auctions, all of them extremely successful. We sold Oprah Winfrey's pink diamond necklace on this website. We've sold a couple diamonds in excess of $125,000, and it's a brand new business. So again, we built this for our clients and our listeners to be able to resell their high-end gold and silver pieces, their emeralds, rubies, and sapphires, but mostly their very rare diamonds. And again, we're extremely excited about the future of our company and how we can help our listeners and our clients do extremely well in a very, very difficult financial world. So we're not the only people and analysts that are recommending diamonds at this point. I may have been the first one 7-8 years ago, but now a lot of other companies are jumping on the bandwagon. We invested very heavily in yellow flawless diamonds because you do not have to buy a multi-million-dollar diamond to make money. A $20,000 diamond in 4 years will be worth $40,000. And 4 years later will be worth $80,000. So if you want an investment for retirement, buy a yellow flawless diamond. Put it away in your safety deposit box, or put it into a beautiful ring and give it to your wife as a gift to enjoy and wear. And the fact is that for the next 10 years, a $20,000 diamond could easily be $100,000. And we would love to sell that diamond for you on our auction site. You would, on a $20,000 investment, if it went to $100,000, you made an $80,000 return. We make $8,000, and you get all of the rest. That's how we work. So the fact is that these yellow flawless diamonds over the next 10 years for retirement purposes are a much better investment than putting your money in the stock market. You know that in 1999, stocks plummeted and everybody lost almost all their money. In 2008, the stock markets plummeted and everybody lost almost all of their money. Why in the world do we want to go through that again? We're probably in a worse situation now than we were back in 2008 when Lehman went under, and all those same risks are still in the market. If you took $20,000 and put it into a yellow flawless diamond, in 10 years you're going to have around $100,000. If you put $20,000 into the stock market, you may have nothing, you may have something. Who knows what you're going to have? But again, a yellow flawless diamond has a track record. So the fact is that you definitely want to buy and invest in some of those assets. It'll keep your money for you. Capital preservation is the most important thing in today's trading because everything is so risky. But again, to be able to invest in a diamond like a yellow flawless that will respond to inflation as well as gold and silver does, in 1979, these diamonds went up 500% in those 2 years. We think that in the next 5 years, we're going to have massive inflation again in the market, meaning that it's quite possible in the next 5 years a $20,000 diamond could turn into $100,000. It did it in 79 and 80. We believe the same thing is going to happen again. The other diamonds to own are Argyle pink diamonds. We talk about the Argyle pinks because they're a phenomenon that 90% of the world's supply of pink diamonds comes from one mine, and that mine is going to close before 2018, which is only 6 years from now. Give it 2 years for these diamonds to run out totally, and if you're one of the fortunate few to own an Argyle pink diamond, we would love to sell that diamond for you. A diamond that you could buy today for $50,000 can be a $500,000 diamond when that mine closes. There will be no more pink diamonds of any consequence whatsoever, as the Argyle mine produces 90 to 95% of the pink diamonds in the world. And if you look at the auction results, you'll realize how fabulous an investment pink diamonds have been. Now, the bottom line is that the mine is going to close before 2018. So again, you want to own one of these diamonds prior to that happening. And in fact, you know, these diamonds go up every year by at least 25%, but then Argyle also takes their top 55 diamonds on tour every year. It's called the Argyle Pink Diamond Tender, and those diamonds sell for a literal fortune. I have those put away, and those are the rarest of all pink diamonds. The other diamonds you want to look at are the D-Flawless whites. D-Flawless whites are the rarest white diamonds. They're colorless, and our diamonds are perfect. I have almost 100 of these Argyle diamonds, of these D-Flawless whites, and I even have a few of the rarest diamonds in the world, which are called Type 2A diamonds. They're nearly impossible to get. The fact is, I have 3 or 4 of them, and they went up in price last year alone on a wholesale basis by 45%. So again, while the whole financial world is in disarray. People can't figure out what to do. Paper assets are worthless at this point. In most cases, bonds are frightening to be in. The stock market is a frightening place to be. Again, everything is happening and is very, very confusing. Let's simplify things. Physical gold and silver you need to own because, again, we're going to have massive inflation down the road. It's an obvious situation. The other situation is rare colored diamonds. Get yourself a yellow flawless. Get yourself an argyle pink. Again, the deep flawless whites, I've got them starting at a half a carat. You can get involved for as little as $5,000 or $6,000. Put some of these away for the kids and the grandkids. Again, with the debt that our kids and grandkids are going to be saddled with over the years, again, it's going to put them in a very, very difficult position. And who knows what the outcome is going to be of the sovereign debt and the countries going bankrupt in Europe and everything. So, again, to put away something safe for the kids and the grandkids and for yourself for retirement is a very, very smart move at this particular point. Something I've done for myself, something I've done for my family, and all of my clients are in the exact same situation. We're going to get through these difficult times, and we're going to be the firm that our clients do the best in. At first, it's capital preservation, but I believe between the long-term gold and silver and diamonds that our clients are sitting in, we're going to do tremendously well. I'm not in stocks. I will not go back into the stock market until the Dow probably drops down to about 5 or 5,800. Again, it's just way, way, way too dangerous at this particular point. The other diamonds you want to look at, which are very, very rare, and we're about the only company that has them, are green diamonds. Green diamonds are tremendously misunderstood, and they're very, very, very difficult to cut. The thing with green diamonds, they're as valuable as blue diamonds are, and people don't know it yet. So it's a phenomenal opportunity to own a green diamond before this market explodes into the millions of dollars per carat, and that's going to happen. And now you can get involved in green diamonds for way, way less than that. When a green diamond is unearthed from the ground, it's actually black. And for many, many years, the cutters didn't know the difference that this was actually a green diamond. They thought it was a black diamond, and black diamonds are not overly valuable. They go for about $400 to $500 a carat on a wholesale basis, where green diamonds go for $200,000 to $300,000 a carat or more, depending on the color. Also, with a green diamond, the GIA, the Gemological Institute of America, will not grade a green diamond from a cutter he doesn't know, and you've got to submit the green diamond as it's still rough for the GIA to be verified that it's an actual green diamond. Then what they literally do is peel the skin off of it, and it turns the most beautiful color green. These are amongst the best diamonds that you could ever get. They are going to skyrocket in price, and if you're one of the fortunate few to ever be able to own a green diamond, you're going to make more money in the diamond market than almost any other market you could be in, and we have green diamonds. We're cutting them as we speak. So we specialize in rare colored diamonds. We have all of the diamonds. We have red diamonds. We have purple diamonds. Again, those are the 2 rarest diamonds in the world. We have type 2A, deep flawless whites. We've got yellow flawless diamonds going all the way up to 30 carats of flawless. Again, we're here to help. And again, in these extremely difficult times, let's not complicate things. There are very few assets that will do very well for you. Rare colored diamonds is probably amongst the best, and now a lot of financial advisors are now starting to come across to our way of thinking and starting to recommend these heavily to their clients because, again, if you're a financial advisor, you put your clients all into the stock market and you lose all of their money, there goes your living. So the fact is that if you're a financial advisor, diversify your clients. Something in commodities and gold and silver and oil, something in the stock markets in certain areas that will benefit them, and definitely show your clients the way of portable private wealth and be able to put away a diamond, again, that could save their financial life when all other commodities and stocks are going to be extremely volatile. So again, go to our website, rarecoloreddiamonds.com. If you want to learn more about investing in rare colored diamonds, it is more than my pleasure to spend the time with you to educate you. We have a phenomenal presentation. We do online seminars. They're totally free of charge. We're here to help you and to explain to you and answer all of your questions auctions. The presentation takes about an hour, and all you have to do is go on rarecoloreddiamonds.com on our website, fill out the application. We will contact you, and whether you're an individual just wanting to learn about diamonds because you want to invest, or if you're a group, we will spend as much time with you and explain everything from where diamonds come from, how they're cut. We have a cutting video that took 3.5 months to cut a diamond, and we reduced it down to about 3.5 minutes. We show you how to read a GIA report, both a half report and a full report. We talk all about flawlesses and all about different cuts and clarities and everything, and then we show you all of the different diamonds, and again, we're the only company, and it's always been that stigma that's involved with this market is, yes, they're an amazing asset, yes, they go up in value, but how in the world do I sell them when I'm ready to do so? And we've listened to you, and I've always known that, and that's why we built H. Siegel Fine Auctions, the only online real-time auction site to resell diamonds for our clients. I've never been more proud or excited about a market at a time when it seems that the whole financial world is falling apart.
Take a look at hsfineauctions.com and go through some of the past auctions and what was auctioned off. Our next auction is going to happen in the fall. rarecoloreddiamonds.com, the website to investigate, take a look around. #1 website on the internet for rare colored diamonds. The telephone number to connect with Harold, 1-800-432-1022, 1-800-432-1022. Speak with him about our featured diamond this week and get those articles from him. Read Diamonds Trump Gold as investor's best friend. Also, Australia's largest pink diamond finds a home at a museum. And Harold's website, Rare Colored Diamonds, is like going to a museum. To invest in precious metals, the one company Harold recommends you use, been in business 10 years, a Canadian company, Worldwide Precious Metals. Their website, www.pmc.com. Telephone number, 1-866-623-2002. In our newsletter this week, we have a quantitative easing and Fed section. Bank of America coming out and saying QE3 is coming in September. You can read that story as well. FOMC members saying more stimulus will probably be needed. Under the, and I should mention, and I touched on it off the top of the show, Goldman Sachs and Bank of America coming out and saying that they believe the Fed will hold interest rates at zero until the middle of 2015. All the things just mentioned, very positive for hard assets. The sovereign debt section, the value-added tax on goods and services. Here in Canada, we have 5% GST. In Spain, it's now 21%. Wolfgang Mantua, and he wrote an article in financialtimes.com. He believes the financial crisis in Europe could take 20 years. That's right, 20 years. J.P. Morgan, Goldman, shutting down European money market funds as the European Central Bank lowered deposit rates to zero. Why take money? Why invest it? You can't make any money. You're only going to lose. France sells bonds at negative interest rate. You can read that story. Also, Denmark in the same position. In the U.S. debt and deficit section, the U.S. June budget deficit widens on 9.3% spending increase. The U.S. government's budget deficit, it was up, in fact, up to $59.7 billion from $43.1 billion. The U.S. national debt has now increased more than $64,000 per federal taxpayer since U.S. President Obama has come into office. The last couple of weeks, we had Stockton, California go bankrupt. We have Mammoth Lakes, California go bankrupt. This week it was the founding home of McDonald's. San Bernardino, California went bankrupt. Scranton, Pennsylvania cut its workers' pay to minimum wage. It was done by the mayor because they don't have enough money to pay for salaries. They only have enough money to pay a minimum wage of $7.25. In the job section of our newsletter, we have a story about, and this is quite stunning, is that they actually are getting more people going on disability than they're adding workers in the United States. And information on the LIBOR scandal as well, which we knew for a long time. There's another MF Global. It's called Peregrine Financial. They were caught in another scandal. Harold, with about 30 seconds left, get the newsletter, get hard assets. It's so important in these times.
You are 100% right, Randy. I mean, all these countries going bankrupt, all these cities going bankrupt. Again, you've got all these scenarios going on at one time. It's just a frightening time to be in the market and very confusing. Again, let's simplify things. We are going to have massive inflation. Gold, silver, diamonds have always proven in history the way to get through these difficult times, and just stay away from the markets that have that risk. The stock markets at this point are the riskiest markets to be in. So again, I hope you enjoyed the show. We certainly enjoyed doing it for you. I wish everybody a wonderful weekend and a very profitable day.
Thank you very much, Harold Siegel. Connect with Harold, rarecoloreddiamonds.com, telephone number 1-800-432-1022. Speak with Worldwide Precious Metals about investing in precious metals, wwpmc.com, 1-800-632-2002. Speak with them about the seasonality and how now is a great time to start your own precious metals investment account. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.